Hello, this is JC De Guzman, and we are now on our top 5 gainers and top 5 losers analysis for May 3, 2019. Let me present to you the 10 stocks that I'm going to analyze today. So we have ICT, HLCM, CHP, SSI, LTG, Bloom, VLL, AEV, VITA, and PXP. So after hearing my technical analysis, I will also give you my recommendation and of course my overall sentiment. So let's begin with the first one. We have ICT. ICT closed on Friday at 136.70. So the major support is positioned near 110.70. And for our psychological resistance, what I did is that I plotted the up Fibonacci for ICT, and we're looking for the 61.8% up Fibonacci extension as the position of our psychological resistance for ICT, and that is near 147 pesos per share. So again, your support is at 110, major support is at 110, and well, not really, yeah, that's the major support, but there's um, shall we say younger support near 123. Okay, 123. And your major resistance or psychological resistance is at 147 pesos per share. Another bullish thing about ICT for today is that it closed above its VWAP of 137.17. And this ascent in price was also matched with a bullish volume that was registered above the 10-day volume average of ICT. I also don't see any bearish formation of a bearish convergence between MACD and the signal line. In other words, MACD remains bullish for ICT. And let's take a look at the trade and volume distribution chart for ICT. So the most traded and most voluminous range of ICT or for ICT is between 136.7 to 137.5. That's closer to the intraday low or intraday high rather than the intraday low. So that will affect my overall sentiment for ICT, and I'm also bullish on ICT. And my recommendation, if you have ICT, just hold on or just ride on to the momentum. Take advantage of this ascent or upward momentum of ICT. You have two options. It's either you just hold your position, watch it inch higher or go higher than its current price, or you top up on your current shares. If you will top up, make sure that you do it. You position your buying price within that most traded and most voluminous range that I mentioned a while ago. If you don't have ICT and you're asking, is it okay to enter a new position? Well, you have seen the bullish signals that I've given you. So I suggest you can also do a test buy within that range that I showed a while back. Now, if the market or if ICT will contradict our data-driven bullish sentiment for ICT on Monday or any day next week, make sure that you know where you trim your losses. Make sure you know where your trailing stop loss is. That should be our default here. Okay? There should be no need for me to remind you to to identify where your trailing stop loss is. There's a guide in our quick start guide on how to identify or calculate your trailing stop loss. Okay? So next we have Holcim. It's a cement company. Holcim closed on Friday at 13.42. Support is now at 12.80. Lower than 12.80, we have the 10.84 as another support waiting at the bottom of 12.8. For the psychological resistance, I have plotted a Fibonacci as well, an up Fibonacci, and our psychological resistance for Holcim is at 15.93. We can call that 16 pesos if we would like to round it off. Now this green candlestick closed above its VWAP of 13.39, so that's another bullish signal for today. And this ascent in price made it continue to move higher than its 10 SMA, and I'm also seeing a perfect bullish alignment among the three SMAs. So those are another 2 to 3 more bullish signals for Holcim. The bullish volume also cooperated with the bullish sentiment for today. MACD remains bullish for HLCM. There's no evident formation of a bearish convergence between MACD and the signal line. However, do take note that RSI is already moving inside the classical overbought level. So my suggestion is that you uh, closely monitor your HLCM. There's no guarantee that the price will touch 16 pesos per share. So anytime you see a red candlestick here, monitor the price closely. You may want to decide to preempt your trailing stop loss or stick with your trailing stop loss as soon as you see one red candlestick. Okay, because anytime from any moment from here, profit taking may take over onto the overall sentiment on HLCM because it's already uh, we are just relying on the psychological resistance and it's no longer a historical one. Okay, okay, there you go for HLCM. Next we have CHP. It's another cement company. So these two cement companies registered green candlesticks today, huh? So CHP closed on Friday at 2.30. Acting support is now at 2.2, meaning to say it broke out above its previous resistance at 2.20 today, and it made the previous resistance as its current support. Now, should it dive again below 2.2, 1.8 will become your support once again. But with its current position, our acting resistance is at 2.88. While CHP is moving bullishly above the 10 SMA, understand that it is still below the 50 and the 200-day simple moving averages. Meaning to say it's bullish in the short term but bearish in the medium to long term time periods. Nonetheless, as far as short-term bullishness is concerned, this green candlestick it closed above its VWAP of 2.28 and it was also accompanied by a bullish volume printed above CHP's 10-day volume average. So those are two more bullish signals for CHP. I also don't see any evident um, formation of a bearish convergence between MACD and the signal line. In other words, MACD is still bullish for CHP. Now let's take a look at the trade and volume distribution chart for CHP. The most traded and the most voluminous range is positioned or printed between 2.25 to 2.36. Needless to say, that's closer to the intraday high than the intraday low. So I'm bullish on CHP, and you can either hold your position or you top up within that range that I mentioned a while ago. First thing after the opening bell. If you're pretty late, maybe you're 5 minutes, 10 minutes, 15 minutes, or 20 or 30 minutes late from the opening bell, I strongly advise that you do a fresh trade and volume distribution analysis. If you don't know how to, just post a request inside our private clients forum and of course, I'll come to the rescue. Okay? Now, if you don't have CHP and you would like to enter a new position, you can also do the same. Do a test buy within that range that I mentioned a while back. Here at Equilist Analytics, we don't buy or sell at any price. We buy and sell within the most traded and most voluminous range. If you'd like to know the reason why, it's written inside our quick start guide. It's already there. Okay, next, we have SSI. SSI closed on Friday at 3.23. Support is at 3.12, meaning to say it broke above its previous resistance today, making the previous resistance as its newest support level, while the latest resistance level is now near 3.4. So this green candlestick also soared higher than its VWAP of 3.20. It's also moving above the 10 SMA, and just like the other stock in the list, I am seeing a perfect bullish alignment among its three simple moving averages. Today's ascent in price was also supported by a bullish volume that was above its 10-day volume average. MACD remains bullish for SSI. However, RSI is already moving inside the classical overbought level. So, be extra cautious again next week if you have SSI. As soon as you see one red candlestick, do another trade and volume distribution analysis to see if the most traded and most voluminous range is already closer to the intraday low than the intraday high. If that will be the case, then you may want to preempt your trailing stop loss, or it's up to you. If you can still tolerate that risk, you can just respect your trailing stop loss and sell once it gets hit. Okay? So, nonetheless, I'm bullish on SSI. Now let's move on to the other stock. We have LTG. LTG closed on Friday at 16.5. Support is at 15.6, or we can say we can adjust this one right here at 15.36, and resistance is at 17.37. This green candlestick rose above its VWAP of 16.37, and it also managed to go back above its 10-day SMA. So it's not quite clear if the three SMAs are already giving us a perfect bullish alignment. I think we're not yet there. Nonetheless, this green candlestick that went above its VWAP also got support, a bullish support from its volume that's almost equal to its 10-day volume average, if not a little bit higher than its 10-day volume average. MACD also crossed above the signal line today. That's a golden cross. Okay, so when the price moves above the 10 SMA and MACD crossed above the signal line, what do you think that signal is? That's a buy signal for me. Who among you are familiar with my 10 SMA MACD combo? I've talked about it a lot. I've talked about my 10 SMA and MACD combo a lot of times inside our private clients forum. So it pays to back read some posts. Yeah. So now, um, let's take a look at the trade and volume distribution chart for SSI. The most traded and most voluminous range is closer to the intraday high than the intraday low, because that one is positioned between 3.17 to 3.24. That's the range, 3.17 to 3.24. I am bullish on LTG. Uh, oh, not LTG, SSI. What did we check? SSI, oh, LTG. We check SSI's trade and volume distribution chart. Let's check LTG's trade and volume distribution instead. Sorry about that. So here you go. The most traded and most voluminous range is positioned between 16.5 to 16.62. It's still closer to the intraday high than the intraday low, a bullish signal. So I'm bullish on LTG. If you bought LTG close to 15.36, then congratulations. Okay. Nonetheless, my buy signal only appeared today. It's Friday because it crossed above the signal line and the price moved higher than the 10 SMA. Okay, so if you would like to ride onto the momentum, you do it within the most traded and most voluminous range. Do a test buy within that range. And then once it draws closer to 17.37, consider locking in some profits, because for me, this is a quite uh, tough resistance to break, historically speaking. So um, if I had LTG, I would consider locking in some profits near 17.37, just in case the ascent in price will continue. And based on what we've seen this Friday, I think it's more likely to continue to go up. But should the market proves me wrong or proves us wrong, we know what to do, right? You know what to do, right? Yeah. So trailing stop loss. Next stock in the list, we have Bloom. Bloom closed on Friday at 12.26. I think this is one of our top 5 losers for today already. It's a red candlestick, obviously. So it broke down below the 10 SMA, and it's about to break below the 50-day SMA as well. Although there's a perfect bullish alignment among the three SMAs, if this redness will continue, I think this perfect bullish alignment will be broken. So take a look at this. This is the essence of knowing how to plot support and resistance levels. The resistance at 12.96 or 13 pesos is a strong one. That's why profit taking became the dominant sentiment when it touched that level. Support is at 11.12. If you bought Bloom near 11 pesos per share, I hope you already sold your position by now. I hope you did it close to 13 pesos per share. Okay, especially now it's already below the 10 SMA. And one more thing, MACD crossed below the signal line. That's a death cross. It's called the death cross. So for my 10 SMA and MACD combo, what we want to see is for the price to move higher than the 10 SMA and for the MACD to cross above the signal line, not the opposite of those two. And right now we're seeing the exact opposite of what we prefer to see. In other words, it's a sell signal. Okay, I can't get any clearer than that. So there you go. Let's take a look at the trade and volume distribution of Bloom. So the most traded and most voluminous range is between 12.66 to 12.8. 12.66 to 12.8. It's still closer to the intraday high than the intraday low. But knowing that it's a tall, relatively tall red candlestick, I would say that I'm already bearish on Bloom in the short term, but it's still bullish in the long term as far as the daily chart is concerned. Okay? But this video is for short-term trading purposes. That's why we call this as trade setups for short-term traders, right? So I'm bearish on Bloom. Don't enter on a new position just yet. Wait for the dust to settle down. Let's find out first next week if Bloom would still want to vomit some shares. If it doesn't want to vomit some shares, then we will check if those four criteria are present. If they are, we will do a test buy. It's okay to do a test buy, provided you do it within the most traded and most voluminous range. Again, if you don't know how to, post in the private clients forum and Batman will come to the rescue. Okay, next we have VLL. Okay, so VLL, okay, let's arrange these support and resistance levels right here. Okay, all right, so VLL closed on Friday at 7.10, support is at 6.29, resistance is at 8 pesos per share. This red candlestick closed below its VWAP of 7.36. It's already moving below its 10 SMA and 50 SMA, meaning to say VLL is bearish in the short to medium term on the daily chart, but it remains bullish in the long term on the daily chart. Okay, this red candlestick got a bearish support from the volume, which is above the 10-day volume average, meaning to say holders of VLL saw something that convinced them to really sell a significant amount of shares because the volume is above the 10-day volume average. Okay, foreign investors sold about 25 or 26 million pesos worth of shares. A death cross was already registered on the MACD histogram. Death cross, death cross. Okay, let's take a look at VLL's trade and volume distribution chart. So VLL's most traded, most voluminous range is between 7.24 and 7.37. Nonetheless, there's another one at 7.10. This will trump that range that I mentioned on top. I would suggest that despite this bulk here, this bulk of volume and trades here, I would stick my eyes to this one because this is the longest bar, and this is not this wasn't caused by cross trades. This is a legit trade because if this were a cross trade, we should only be seeing a huge volume with very minimal number of trades, but it's quite balanced. Huge volume, high number of trades, so it's a legit volume. Not it wasn't caused by a cross trade. So I would say that it's still closer to the intraday low than the intraday high. So I am bearish on VLL. I suggest that you wait for a pullback close to 6.30. Okay, I don't see any midterm support right here, or maybe this one at 7 pesos per share, 7.10. Well, let's see if VLL will support this midterm support. Let's force it as a midterm support, 7 pesos per share. So let's see on Monday, Tuesday, or Wednesday if VLL will respect this midterm support at 7 pesos per share. If it does, let's recalibrate, check if those four criteria are present. If they are, do your reward to risk ratio. Calculate. If you're happy, then you do a test buy within the most traded and most voluminous range. Sir, what's this reward to risk ratio? This is only now that you talked about it. You didn't mention this reward to risk ratio on the first stock when you were discussing it. Check the quick start guide. I already explained the reward to risk ratio there. I gave you the formula with example so you don't get lost. Okay? Check the quick start guide. It's our quote unquote Bible. Okay? Now I am bearish on VLL. Watch out for 7 pesos per share. If it goes below 7 pesos per share, then you wait at 6.30. Don't enter just yet. Next, we have AEV. AEV closed on Friday at 52 pesos per share. Support is at 50.2. Resistance is at, not this one, resistance is at 61 pesos per share. I'm also seeing a bearish volume that was registered above its 10-day volume average, almost above or slightly below, a few points shy from the 10-day volume average. Nonetheless, MACD has been bearish on AEV since April 15. FYI on that. And RSI is inching closer to the classical oversold level, and I think it will enter or maybe gets way closer to the classical oversold level once the price of AEV touches 50.2 or 50 pesos per share. So let's see if 50.2 or 50 pesos per share will serve as a rebounding zone for AEV. For now, let's take a look at the trade and volume distribution chart of this stock. So the most traded and most voluminous range for AEV is between, it's hard to decide if we will just look at the trade distribution chart, but it makes it easier because of the volume distribution. Somewhere here, 52 to 52.85. So it's closer to the intraday low than the intraday high. Let me just segue this. This is the very reason why I decided to separate the trade distribution chart from the volume distribution chart. Because sometimes it's quite, it's extra challenging, it's extra difficult to decide where the most traded and most voluminous range is if we will just be looking at one chart. So it makes sense to separate the two. Okay? I know because I had a hard time before, so I had to find a solution to my problem. And I came up with this one. So I am bearish on AEV. I suggest that you wait at 50.2. Don't hurry. Hold your horse. Don't hurry. Next, we have VITA. VITA closed on Friday at 1.37. Support is at 1.36. Oh yes, just one tick away from breaking below the support. Resistance is at 1.75. And this red candlestick closed below its VWAP at 1.38, and we also see a bearish volume. Okay, bearish volume that was above that is above the 10-day volume average of VITA. So now MACD has been bearish on VITA not just today but since April 17 or maybe April 16. Okay. Now let's see on next week if VITA will respect 1.35 as a strong support level. Otherwise, if it does not respect that 1.35 level, then let's plot a down Fibonacci here so that we can identify the psychological resistance. That would be no psychological support. That would be at 1.12. In other words, if VITA will break below 1.35 or 1.36, the next support level would be at 1.12, which is in confluence with the 61.8% down Fibonacci extend or retracement rather. Okay. Now let's take a look at VITA's trade and volume distribution chart. So the most traded and most voluminous range is between 1.35 to 1.4, closer to the intraday low than the intraday high. So don't hurry. Let's monitor VITA. Add it into your watch list. I like VITA because there's no serious liquidity issue on this stock, this speculative stock. So this is one of the stocks that is in my watch list. Okay, that's a personal disclosure. Okay, but I am bearish right now, so I am on a wait and see mode on what's going to happen on VITA above 1.36. If it rebounds above 1.36 or 1.35, I will check if those four criteria are present. If they are, I will do a test buy within the most traded and most voluminous range. You don't have to do the same thing. Make sure that you decide based on your own investment horizon and risk tolerance. Okay? You're not JC de Guzman and I am not you. Okay? That's what it means. Okay? We have our own DNA when it comes to trade risk tolerance and investment horizon. Okay? Next we have PXP. PXP closed on Friday at 7.78. Support is at 6.78. Resistance is near 10.05. I'm already seeing a perfect, guess what? Perfect bearish alignment among the three SMAs of PXP. It has been in a downtrend since when? Since last year. Okay, since last year, November last year. So support is at 6.78. Let's see if it will hold on to its dear life at 6.78. Otherwise, if it breaks below 6.78, 5.11 is waiting at the bottom. Oh yes. Volume. There's a bearish volume for today as well. Foreign investors sold about 1.2 million pesos worth of shares, and they are bearish for 2019 year to date also. Let's take a look at the trade and volume distribution chart of PXP. The most traded and most voluminous range is between 7.7 to 7.88. That's obviously closer to the intraday low than the intraday high. And I am bearish on PXP. If you don't have it, good, good. Wait for it. Wait for it to find a rebound zone, rebound area. Don't enter just yet. And if you still have PXP, I have a question for you. What in the world did you see on PXP that made you hold on to the stock? Okay. Here in the Philippines, I know fundamentals are important. Okay, fundamentals are important. But here in the Philippines, given the volatility issue of the entire Philippine stock market when compared to the volatility of its peers in the US, let's say, or in the Europe, we still have a very uh, slim market, so to speak, in the Philippines. That's why fundamentals don't have uh, teeth, so to speak, when it comes to the price movement of the stock. We are still a market. The Philippines is still a market wherein sentiments are still heavily driven by technicals more than fundamentals. I wrote this in one of my articles a few years ago that my friends or my colleagues who are CFAs, okay, they are CFAs. Their bias is supposed to be on the fundamental side of the story, but they also agree with me that we are a market that is driven by technicals by a significant level. That's why I don't know. Even if you tell me that PXP has good fundamentals, I'm not going to buy that. I'm not going to add that in my buy case for me to hold on. Okay. Um, don't tell me that you're just praying and hoping for PXP to go higher. That's why you're still holding on to this stock. It's okay to hope and pray. You can add five more Hail Marys if you'd like to, but don't just rely to it. Make sure that you make some logical decisions. Okay? Make some logical decisions. Please. Okay? So there you go for my top 5 gainers and top 5 losers analysis for May 3, 2019. Those who will attend to my workshop tomorrow in Makati City, I'll see you tomorrow, Saturday. And I do hope that I'll do my best for you to uh, learn more on how to execute more independently, but of course confidently as well. And as a side effect, it should be profitable for you too. Okay? So again, my name is JZ De Guzman. This is um, our video for trade setups for short-term traders for May 3, 2019. Have a great weekend.